Righty, let's get started. It is now 7 p.m. I want to welcome everyone to the advanced series of Creating Minority Real Estate Millionaires. I am your host, Mr. Ray, and I'm here today to talk about a key piece of real estate investing, that is being able to finance your real estate deal. This is a very key piece to you being successful and you being able to get the right deals on the right houses and to get them financed. So I really need everybody to pay attention today and make sure you ask questions. I don't want to leave you out here without you understanding exactly what we're trying to communicate today. So let's get started. Same ground rules as usual. I believe we have the chat going. You guys can chat among each other. And as we're going along, if you want to, just go ahead and put your questions in the chat. And at the end, I can go back through if somebody on the phone doesn't already answer it for you. So let's go ahead and get the party started here. So our agenda for today, we're going to be talking about financing. And so I'm just going to kind of give you financing 101, what you can expect when you go to the bank and you want to do some financing for an investment property. So we'll talk about what those qualifications are, what the documentation requirements should be. And then I want to talk about a few of the terms and rates that banks are offering here in the Oklahoma City area. And then I also always want to give you time to ask you questions. So when we talk about financing investment properties, there are several different entities that provide financing for investment properties. There are private mortgage companies that provide for those loans. You got national and state banks. You got the big banks, Bank of America, Bank of Oklahoma, Chase, they all provide that. And then you got your local state banks that you might have in your particular area. There's credit unions, and what I'm finding out now is that credit unions have some of the best deals on real estate. If you happen to be lucky enough to be able to join a credit union, be it the Navy, Army, out here we have Tinker, got several credit unions, and these credit unions are all willing to offer their members some financing on real estate and more specifically investment properties. You have private lenders out here that really love to lend money on real estate. And so we'll talk about those. And then you have your hard money lenders. These are the last line of defense. If you can't find money anywhere, these guys will loan you some money, but it's going to come with a price, baby. It's going to be a hefty price. And then owner financing. I love owner financing, especially when I can find someone who owns the property free and clear. They've had it for a long time, and they just simply either don't want to keep up with it for maintenance reasons, or they've held it long enough, or there's been a death in the family, a divorce, whatever. When you can get owner financing, that's the way to go, because you don't have to go through a lot of these qualifications that I'm going to be talking about in a minute that the banks are going to require you to jump through. And so some of the typical rates that we're seeing when you talk about real estate, when we talk about leverage, that means that the bank is allowing you to put down, say, 20% on a loan, and they will leverage and give you a loan for that 80%. That's what we call leverage. And so we have here banks, you can get loans anywhere from 3 to 6%, 6% more so on investment property, 3% if you're owner-occupied property. I mean, the rates are really low. I've seen some rates down to 2.5% on 30-year mortgages. So you got great credit. Right now, if you want to get you a house, it's a great time. If you got a job, a W-2, the banks would love to give you money. If you get a line of credit, I have a line of credit that I have right now. It's about 5%. So on my line of credit, I can draw that at any time. It's a $100,000 line of credit, and I can go get that. And all I got to do is pay interest only on that until I pay it back. There's private money out there, private individuals that like to share and allow you to um, get some leverage on some investment property because they know they have hard assets that they can attach a lien to make sure that they get their money back. Now, hard money lenders, or these are just guys, they're kind of like private lenders, but they charge you a lot more. In fact, they'll loan you money to do the fix up, to do the flip. They'll do all of that. It's so risky though. They'll only do 60% of the after repair value, whereas banks will do 75 to 80%. And then owner financing, again, I love owner financing when I can find it because a lot of times if I find a person that wants to do owner financing, I can negotiate with them. I try to figure out what it is they want. Are they trying to just get a monthly payment? Do they just want to be cashed out after 5 years? I mean, what's their deal? So we'll talk about when we get to that part of our training, how do you handle owner finance and how do you negotiate? So that's a key piece of leveraging real estate. So when we talk about getting financing, we always got to start with the document requirements, and these can be extensive sometimes. I remember when I first bought my first home, I couldn't believe the stack of papers that I had to provide for the lender in order for them to give me the loan. So they're not giving you that 80% value in their property for nothing. They want you to have some stake in it. So they're going to do background checks on you. They're going to make sure you're legit before they give you, especially money on an investment property. They love to give money when you live in the house. It's your property. You're owner occupying that property. They'll do that for you all day. But when you talk about investment property, it can be a little bit tricky. So let's talk a little bit about some of the requirements that are required. First of all, they want to know, do you own your own home now, right? If you want an investment property, it's very good that you already have a property that you live in. With them, they see you as lesser risk. If you're just coming in, first property you want to buy, you don't even own a home yet, but you want to buy investment property. So they really like to see you be a current homeowner already. Although, again, they'll give you the loan, but this is just some of the things that they're looking at. Of course, they want to know what your marital status is. They love married. For some reason, you're more stable. You're more likely to pay that loan. So they look whether you're married, how long you've been married, things like that. And that's all legal. That's stuff that they can look at when they try to determine whether or not they want to loan you money. Credit score. This is a biggie right here. This is where a lot of people fail to understand that if you don't keep up with your debts and paying them on a timely basis and making sure you don't have, a high amount of debt, a lot of credit card. I mean, those things can affect your credit score. I mean, you know this when you go down to buy a vehicle or anything, they want to know what your credit score is. So banks use this to determine how risky you are. The higher the credit score, 800 or so, they'll pretty much give you whatever you want. On the lower end, when you get down to 400 and 500, they shy away, or else they're going to charge you an exorbitant amount of interest in order to protect themselves. So make sure, ladies and gentlemen, that you know what your credit score is. You got some things on there that are negative. I need you to be working on taking care of those. Get your house in order so you can be ready to buy investment property. Banks are looking for how long you've been on your job. They really like you to be on your job for 2 years or more. If it's less than that, they get a little skittish, but if you can show that you've been on your current job for 2 years or more, they like that. They want to look at your annual income. They're going to look whether you're self-employed or whether you are with an employer that gives you a W-2. It's harder to get loans when you're self-employed, if you own your own business or restaurant or whatever, but you got to bring in a lot of documentation to verify what your income is. Whereas if you work for a company, you got that W-2. And so it's very easy for them to see how much you make on an annual basis. They're going to be looking at your current debt and your obligations. So they call it the debt to income ratio, right? And that means that, let's say if you have a $1,000 worth of revenue or income coming in, that your debt can be more than 35% of that, right? And so if you got $1,000 and we're talking about what, $350 in debt is kind of what they like to keep you at, because anything over that, if you're spending more than 35 and 40% on debt, then they think you're getting a little bit tight there. You're carrying too much debt. They definitely don't want to see anybody carrying 50% debt. That is, you got $1,000 coming in and you paying $500 out every month just on that debt. So they like to see that low debt to income ratio. That's why I encourage people, as you're in the acquisition phase, you're getting properties, you're running up the debt, but over time, after you start picking up all those properties, then you need to start paying that debt down, because they start looking at, how many properties you have. And then if you got any delinquent accounts, that's what you want to have is none delinquent when you apply for a loan, right? You don't have anything outstanding, so it's good to go check your stuff, make sure everything's paid off before you go looking for a loan from a bank on investment property. They're looking at if you had a previous bankruptcy, that's a red mark to them. They're saying if you've already filed bankruptcy, depending on how long it is, it's been more than 7 years ago, it probably won't impact you as much, but they still will look at that. If you had a previous home foreclosure, that's going to be a negative. It's going to be very hard for you to get a new loan if they see that you had a previous foreclosure on your record. And then they want to look at the number of investment properties that you have. Again, do you have loans on these properties? Do you own them free and clear? What are you trying to do here? So when they look at all this stuff that goes in to determine, the underwriter will look at this stuff and determine, whether they want to give you a loan or not. So that's quite a bit on that page. Let me stop right here and ask if anybody got any questions before we go on. Okay. All right. So when you talk about securing these loans, this is some of the things that the banks are going to be looking for. They're going to be looking for 2 years of federal and state taxes. So you file your taxes, you'll have to give them copies of 2 years of taxes. They're looking for 2 years of W-2 from your employer, or 1099s if you were getting those, if you were independent contractor, or again, if you are self-employed, you're going to have to figure out how you can show them the income that you're receiving. And then if you own current rental property, they're going to want to see what your current rent rolls are. That is, how much are you collecting on the properties that you currently have in your portfolio. And then they're going to be wanting to verify all your debt, all your credit cards, got automobile loans, got any other home loans. All that stuff is going to be included on the application whenever you apply for these loans. So again, this is documentation. This is it can be a daunting task sometimes to put all this stuff together if you don't already have it, right? So it's very, very good. I always like to make sure that I have, an income statement. I have a net worth statement. I keep all these, my taxes and all those things in one area that very quickly I can send that to a bank. And a lot of times the bank that I work with, they already have this information. So I only have to update it. Every year I get some new tax, I'll just go ahead and send it into the bank so they already have it. So when I come in to apply for a loan, I'm already ready to go. And that's why it's important, if you can, to build a good working relationship with some bankers in your area. Any questions?
How often getting these doors, does it affect your credit? Like saying you got one 6 months ago and you decide to go get another one 3 months down the road. How does that affect your credit score?
I'm sorry, I missed the first part of that.
Well, I was saying basically with you collecting doors throughout the year, how does that affect your credit score with the bank that you're going through to get one 6 months?
I'm getting new properties.
Yeah.
Well, again, if you, as you get properties, as long as you're adding in more income, it's not a detriment. But if you're getting properties, and they're not cash flowing, and you just continue to, yeah, it's going to start affecting your credit score, right? Number one, you're not going to be able to keep up with the payments on the ones that you have if you got negative cash flow on those properties. But as long as you got good cash flow, for me, what I've seen is they really don't care as long as that cash flow is more than what, what that debt is on that loan. Other questions? All right, so let's look at a typical investment property. What kind of terms are banks giving on those? So typically on investment property, you're going to be putting down anywhere from 20, 30%. 20% used to be the standard. I'm hearing a lot today. A lot of these banks now are wanting investors to put down 30%. So they're getting a little bit more risk averse with COVID and everything that's going on in the market. They want you to put a little bit more skin in the game. Interest rates, depending upon your credit score and the like, are running anywhere between 5 and 8%. Right now, I can get 5% on most of the stuff that I'm financing and refinancing with the bank that I'm working with. The terms are 10 to 20 years. It's hard to get 30-year loans on investment property anymore. You can get it all day on owner occupied. If you live in the property, they'll give you 30 years all day, but they like to accelerate those terms when you're talking about investment property. To them, it's a little bit more risky. And then the banks also, they like for you to have 6 months reserved. I always tell you guys 3 months. A lot of times I'm seeing these banks now, they're wanting 6 months in reserves. And then we already talked about that debt to income ratio. They like that around 35%, right? So if you got $7,000 coming in income every month, they don't want to see your maximum expenses on debt to be any more than $2,500. That would put you at the 35% interest rate. Any questions? Okay. So what's the process? It's the process when you go and apply for a loan. Today we're talking about financing. How you gonna get financing? How do you get this process started? So first you submit your loan application, and a lot of times I say this is pre-approval. I always tell guys, go to the bank and get you a pre-approval letter, because if you can take that pre-approval letter with you when you're making your offer on a property, that shows that you're serious, you're ready to go. They don't have to worry about are you ready to go on your loan. Not that you've already, now the loan hasn't been approved yet, but their bank is saying, we'll approve you for this amount for this length of time. And that gives you some ideas of what you can kind of go out and be looking for. So again, you submit all the necessary documentation, the W-2s, your taxes, all the letters signifying anything. If you had any negative thing on there, you want to write a letter to say why this thing was negative. Maybe it was an old hospital bill that you had that you didn't pay back in 1992 that's still showing for some reason. Just cleaning up all that stuff and then answer all the questions that they have. And usually it takes a week or two for them to get back with an answer for you after you've got all the documentation to them. So at that point, you know, you got your pre-approval letter, you're ready to go. And then it's time to go out and submit your contract to purchase the real estate. That's when the underwriting is going to begin. The bank is going to be validating, verifying all your information. Again, they'll be asking you questions back and forth. What is this? What is that? Once you give them your bank statement, they want to know, you know, what's that $10,000 withdrawal that you made on such and such. And a lot of times, man, why do you need to know that? Well, they have now said, you want money from us, we're going to need you to answer all these questions that we might have. So I always tell people, when you're getting ready to apply for a loan, don't be doing anything crazy. Don't make no major purchases. Don't do anything over and above what you normally would do, right? Anything that would cause raise suspicion, like, some people, if they don't have the down payment, well, they'll get a down payment from somebody else. Well, you'll have a big deposit in your account. The bank want to know where that came from. They're saying, well, you said that's my deposit. Well, they won't let you really take a deposit from somebody else. You got to show that that money is yours, that it's been in your account, and that you didn't get it from somewhere else. Or you're going to have to show them that you have the documentation where you borrowed it from someone. So they want you to have skin in the game. They don't want you to have that down payment from somebody else, because that means that you're 100% leveraged. If you got no skin in the game, you borrowed that money, then you got no skin in the game. They want you to have something in the game. Questions, comments?
Let me ask you a question. If a bank was going to lend you a loan and you didn't have to put nothing down for, let's say, a $100,000 property, would you go with that loan, or would you rather have some skin in the game? I'm just using it as an analogy,
Banks are
just
not going
saying.
to give you, on investment property, they're not going to give you 100%. You have to have 20, 30% in the game. Now, if you're going for property that you're going to be living in, yeah, they'll give you 100% financing on that. But no bank is going to give you 100% financing on an investment property. Doesn't happen. Or I haven't found out. If you found one, I need you to send me the number so I can go talk to them, because I can go do some deals with them.
I've been trying to do that. You don't ever believe me.
Well, you ain't send me the documentation. I'm still waiting on the documentation, sir. When you give me the documentation, I'm going to put it up.
Yeah, Mr. Ray.
Yeah.
Good question. So if just draw blank for a second.
All right.
Okay, I got it. So if you say an investment property is going to, they want you to stay in it for a year. So what are they going to be, you need to provide them with some documents that you're showing that you're there? Because if you have another property, you could be living over there. I mean, is it just, are they really cracking down on that? Or can you just have the property, say if it needs some rehab and you can't really put a pin in there right immediately? What, is there any kind of, how do they know you're even in there? I mean, I'm just curious about that.
Okay, so it sounds like you're talking two different things. Let me see if I can clarify. So the bank is either going to give you a loan as a owner occupied, that means you're going to be living there, or they're going to give you the loan as an investment property, and that way they don't care whether you're living there. If you buy the property as an owner occupied, you have to live in it at least 1 year. If you buy it as an investment property, you don't ever have to live in it. So how can they verify if you're living there or not? I guess they could drive by. They can check the utilities to see if it's in your name or in somebody else's name. What I found out is that a lot of times, and I'll tell people this, I mean, if you sign a document, they make you sign a document swearing that if you're owner occupied, that you will be living in that house. And once you sign that document, it's a legally binding document. And if they find out you're not living in that home, they can call that loan immediately. Although I've never seen that happen. I've heard tell a story that has happened to a guy, but only because he wasn't making the payments. Usually, if you're making the payments, they don't care. But you are taking a risk. If you sign an owner-occupied document, and it's an affidavit, and you swearing by law that you're going to live in that property, they can hold you accountable to that. Again, they can call the loan immediately due, and they can foreclose on it. Does that help?
Yes.
What other questions? All right. All right. So here's some of the current offerings that I found out there here in Oklahoma. I know we got people on the line that's in other jurisdictions, but here in Oklahoma, here's kind of what you can get. This is probably pretty clear what you can get around the country. So the bank that I use, Prosperity, I can get 75% ARV every day, 5%, 15 years fixed. So I can get that all day, every day. 75% of the purchase price. You'll notice there, they won't do 75% of the ARV. They want to just do it off the purchase price. And for me, a lot of times that works against me because I'm buying these properties, below value already, right? And so I really have to work extra hard to get down when I want to use them. In fact, I'm probably not going to be using them anymore because they changed it from ARV to purchase price on me. So if I could get 75% of the ARV, I can get more money. Whereas if I'm only getting 75% of the purchase price, because I'm purchasing it already for 75% of the ARV. So can't really do those deals anymore. Tinker has 75% of ARV, 6% for 30 years. That's a nice rate right there. You can get that. I haven't verified that, but somebody said that's available. Bank of Oklahoma, 75% LTV at 6.3% for 20 years. And then Sooner State Bank, they're looking at 80%, 5.5% for 15 years. So that's kind of what we're looking at, investment property here in the Oklahoma City area. Questions, comments?
Ray?
Yes.
How does the loan process differ for a purchase loan versus a refinance loan, or does it?
It doesn't really differ. It's the same requirements.
Okay.
Now I got a little free time tomorrow, so I'm gonna go to both of my credit unions and I'm gonna ask them for documentation to show you what me and you discussed yesterday.
Yeah, Don. So you tell them what you said your bank will do, and I said I don't, and that's why I want documentation. But go ahead and tell them what the bank said they'll do for you.
Now, I called Tinker Federal and they said that they would do 70% of the ARV. And they'll give you a 3.625 is what the interest rate will be for a 30-year loan, with going with the single family home with a credit score of 720.
That's on investment property, right?
Yes, the investment property.
Okay.
So Navy Federal stated that they only do 25%. They need 25% down. For a $100,000 property is what I gave them to go off of. And if you want to use 1.5% points, meaning you're purchasing those points to lower your interest rate, you can get it low as 3%, but that's only for 15-year loan. So like I said, it comes with the part of you have to be a member for these credit unions. And basically, like I said, you have the option of buying points or the fact of your credit score and those certain things factor in. But it's the best that I've heard by far compared to these other banks and other places so far. But like I said, I'm going to go to them and ask them to print something out so that I can give it to Ray. So like I said, if you know family members or somebody that can get you in, or you can go yourself to get in, I think that's the best way to go to get a 30-year loan for 3%. So hopefully I'll be able to get that together for y'all.
That's tasty, baby. If you get that, I'm going to be all over that myself. 3% for 30 years, I'm all in, baby. In fact, I'll refinance everything I have with them. How about that? All right, any other questions, comments on the current bank offerings? All right, let's say you don't have any cash. And how do I do this, Mr. Ray? Well, we talked about a little bit. The other thing, like I said, you can use these hard money lenders out there, but it's going to cost you 13, 15, 18% on your money, and they're only going to loan you 60% of the ARV. Find some owners that's willing to finance on it. This is the part of the game that's hard because you got to be out knocking on doors. I mean, sending out letters. I mean, you got to be contacting people that are not on the MLS, that's not on Zillow. This is where you really got to do your work and find people that want to sell you their house and they're willing to finance it. It takes work, but I've had three. I've had three that I've had owner financing initially, and I ended up going to bank financing to get the long term. But initially, I would take the owner financing because a lot of times I didn't have to come up with as much cash, and the owner actually gave me better terms. You got to develop a side hustle. Just get some extra money, babe. Whatever you're good at, figure out what you're good at, go make some money doing that, right? And then maybe you buy some property, flip it for cash. You keep flipping it, making you some more cash until you can get enough cash to get a down payment and get you an investment property that's going to keep bringing in that money to you every month. And I hate to even say this one, families and friends, get them to buy into your plan. If you can do that, good luck to you. But you got to sell them that you got a good plan. Tell them you've been on Mr. Ray's class. Maybe they'll give you a little bit. They're like, who is this Mr. Ray? And what does he know about me giving you my money? Anyway, there is a way for you to get in the game, but you got to work hard at it. It's not just going to come to you. Again, we talked about the banks. They're there. But if there's other ways you can get cash, let's do that. All right, baby, let's get out there and get that money. Questions, comments? I got a couple other things I want to show you before I finish. I'm going to show you kind of what a closing document looks like. Let's just go ahead and go to that now. Any questions?
Hey, Mr. Ray, how did you calculate that debt to income ratio again?
So for instance, if you have $1,000 income coming in,
Okay.
and so if you of that 350, what's that? Let me make sure I'm right here. So I got 350 divided by 1,000. That's 35. Yeah, that's 35% debt to income ratio. If I'm making $1,000 and then 350 going out in bills, that's a 35% loan to value. I mean, a 35% debt to income ratio. That's what you asked, right?
Yes, sir.
Yeah, it's debt to income ratio.
All right. Thank you.
All right. Let's see here. I want to show you guys a closing statement. The first one is a property that I closed back in 2004, I believe. Let's see if I can pull it up here. So this is a HUD statement, and this is a HUD 1, and these are the statements that they give you whenever you're closing on a property. So it shows I'm the borrower. It shows who the seller was. I bought this. This was a Fannie Mae home that I bought, and First State Bank was the one that was doing the loan on it. You can see here's a lot block number. This was closed in June 2014 is when I bought that duplex. In fact, yeah, hold on here. Yeah, okay, I'll show you the duplex later. But anyway, I bought this property for $133,000. So I kind of want to show you what a closing statement looks like on that property. So you'll see on one side, it'll show the borrower's transaction and the seller's transaction, right? So the contract price was $133,000. That's what I bought it for. These are some closing costs right here of $5,000. I'll show you what those are on page 2. This is just kind of summary of them. There's a homeowners over there, so a homeowners association due is due. And so as you go down here, you'll see I had $1,000 earnest money that I gave them. And the seller actually paid $3,800 of my closing costs. And you can see that over here on the sellers. Here's this is the agent fee for the real estate agent. This agent, she had both sides of the deal, so she got the $7,000 there. As you come down here to the bottom, you see I came to the table with $26,000 on this deal because I had to have 20% down. And then at the end of the day, the seller ended up getting $119,000 of that 133 price because the rest of it was closing costs that they paid for themselves and they had to pay for me. And they also had to pay both sides of the realtor. If you look on page 2, here's where they eat you up with these fees. Let me show you some of these fees that they charge back in the day. So the brokerage fees, 3% on each side was $7,300. That's what the realtor got. Here's origination. They charged me $995 for origination. There's the appraisal fee. There's credit report. There's another something for appraisal. I think they stuck me with $100 for nothing. Then interest, they show how much interest that you pay on a daily basis on a month. So you pay, so if I close in the middle of the month, let's say the 15th, then I have to pay 15 days of interest, right? So this is the interest from June 27 to the end of the month that I had to go ahead and pay on that. There's homeowners insurance. It's $137 a month. There's county taxes at $172 a month. And now you get down here to all this big dollars right here. They got the title insurance, $1,700. There's owner's title insurance. There's lender's title. I mean, they're getting all this insurance for people that don't even have nothing in the deal, right? But they're going to charge you for it. And you can see down here all these other charges, abstract charges, UCC church charge, title exam. I mean, they will fee you to death. You see all these fees that they be charging you. And you can say, well, can we stop them from charging them? Nope. Those are fees that they say are required to close this deal. So again, I had the seller paid a lot of my closing costs. So it was like $7,000 closing costs. I only ended up paying like $3,000. They ended up paying like $4,000 for me. And then you just see, so I just kind of want to give you guys just an idea. This is kind of what a HUD, and you should get this before any closing, right? You should request this. I want to see a copy of the HUD one before I close this house so I can make sure everything is copacetic. Any questions on that?
Well, I had one question, since you're talking about duplexes, is would you be entertained buying half of a duplex? Because
No.
I know it's hard to get both sides.
Yeah, I want the whole building. If something happened, let's say half of it burns down, I don't know how that works. So if I got half of it, I mean, it's one building. I personally, I wouldn't buy half of a duplex. I want the whole thing.
Okay.
Because I don't know all the things that go on with that, Ken. I can just imagine there'd be some issues with owning half, of a duplex. But I could be wrong. I see people doing it. People all day own one half of a duplex. I get that.
Yeah, that's what I see in a lot of those half, and I'm just was curious about that.
Yeah. Anybody got any other questions? All right, I'm going to show you one more deal here. This is a refi. Let's see here. This is a refi that I just did on the Ballot property. Make sure you guys are seeing that. Yeah. Okay. So this is the Ballot property that I bought recently here. Remember, I bought it for cash, and then I turned around and refied it, right? So I ended up leasing it on September the 1st, and I refied it on September the 2nd. So it's $100,000. Let's see if I remember. It's $110,000 is what I bought the property for. So the bank gave me the $100,000 and I put 10,000 of my own money to get the loan. So, but this is just, I wanted to show you the difference in the closing statement on a refi than when I did just an additional loan. There's not as many fees involved. So here, all they did, the bank did, they did an appraisal. They checked for flooding. They did a flood fee, no hazardous, no taxes, no none of that. I'm taking care of all of that on my own. The only charge that I had was title insurance. So as you can see, that other loan that I closed, I had about $7,000 in closing costs. When I did the refi, there's only about $2,000 in closing costs. Let's see what I had here. I had $1,800 in closing costs on this particular property. Any question? See, I'm giving you guys real time. This is real information. This stuff is not made up. These are documents that are on file and they can be verified. So this is the stuff you need to be aware of when you start dealing with the banks. Questions, comments?
Hey, Ray.
Yeah.
I have a question. For a first-time investor, would you recommend or advise us to stay away from like HUD properties in like the foreclosures or pre-foreclosure just because of so many hurdles and barriers just to get those properties, or
No, I wouldn't say
just
that.
go ahead and go for what you know?
What you know, because my first, three of my first 5 properties were Fannie Mae properties. They were HUD properties. I found them online. I got with a real estate agent. I didn't know what I was doing, and I bought it, like that duplex there. You know, I probably paid a little bit more for it. That property, I bought it for 133 back then, and what was that, 14? It's worth 195 today. So I ended up doing pretty good on that. That property today, and that's when I'll show you the numbers in the future. I bought that property for 133. At that time, I did get a 30-year note on it, and it was at, I believe, at 5%. I'm paying $555 a month for the mortgage on that. I lease out both sides for $1,100 each. So I make $2,200 on that $500 note. That's the type of deals I'm telling you that you can do. So they're out there. So I would say yes, Dean. If you see a deal, by all means, if you can get in it, like I said, 60, 70, 80% of the ARV, I say go for those properties.
Thank you.
Welcome. Now, you do have to have they have certain realtors and real estate agents that they work with on those HUD homes. So you have to have a HUD certified real estate licensed individual to help you on that, because there are some quirks. How you put the bid in, it has to be all electronic. You got to show that you're already approved for a loan. So they do have a lot of different stipulations that you may not have, you know, when you're buying a home from somewhere else. Any other questions, comments? Is this helpful? Is this the kind of information you guys are looking for? I don't want to giving you stuff that you already know. So I'm taking it to the next level, to the advanced class. So if you want to get property finance, here's the way you get it done. All righty, let's see. I think that's all I had today. I'm still working on finalizing so I can let you guys see what I did on the last 2 properties. I have leased out the property over on Madison for $850 a month. So I'm going to go back through that. I'm going to show you the before and after pictures and what the numbers are. And then I'm also going to show you the Ballard property. Lila's still teaching me how to do this video thing. So I'm going to figure it out and we're going to be ready next time. All right, ladies and gentlemen, it's been another great day. I look forward to seeing you. Oh, I've got I'm going to be speaking at the Northeast, I believe it's a development conference on Saturday at around 8 o'clock. So if I get the Zoom link, I'll send it to you guys. They're going to have several speakers on there. I'm very blessed to be one of the speakers that's going to be coming on, of course, talking about real estate, minority real estate investors. So if I get that link, I'll share that with you guys so you can listen in with me, and maybe some other speakers may learn some good stuff. So hope you guys have a great day. We will see you on Monday. If you're coming back for the foundation class, we'll be foundation class Monday, then we'll be back with the advanced class on next Thursday. So you all have a great evening. We'll talk to you later.
All right. Thank you.